All right. Oh, welcome guys. Welcome everyone to the Thursday live stream. Oh, thank you guys for the likes. Hey, what's up guys? What's up? Welcome. Seems like the live stream crowd is always getting bigger and bigger. It's awesome to see. All right, so I kind of want to go over a specific. Well, I want to be a bit more objective orientated today. Tonight. So I want to go over small caps first of all, and kind of give you guys an insight into what I'm looking for on small caps, and how they've been basically helping expand the overall underlying breadth that we've been seeing, the overall market internals, and how that could even affect a potential overall market pullback and what IWM can do. Now, I've been kind of giving you guys little hints here and there in the past few live streams in the past around 2.5 weeks. So it might sound a bit familiar for the people who have been watching the recordings or watching during the live streams, but I will go over them again, but a lot more detail. So be ready for that. And then after that, I want to take a look at specifically a copper company and a uranium company. Overall copper and uranium, since commodities tend to move together even if you're looking at individual companies. So with that, let's start off with small caps. So small caps today certainly had this little inkling that we were about to have a nice breakout to the upside, right? Because we've been holding over this critical psychological level at $200. And obviously, the longer we stay above a critical level like this, the better it is in the long term, mid to long term. But we continuously see a huge area of sellers, a huge supply area of sellers between 200 to 209. And this is kind of the range that we're stuck in currently. And if we're able to break away from this current flag that I've made here. So this is the trend lines that I've drawn a couple weeks ago. Or I believe it was Tuesday actually, this week Tuesday, if my memory serves me correct here. But this potential flag here could be something to be watching out for, because the price is certainly still trying to continue to adhere to these two trend lines, this ascending support trend line and this descending resistance trend line. And so if we're able to stay above this descending resistance trend line, so somewhere around at the minimum 205, okay, that's the whole number level of 205. If we're able to stay above 205 and stick over it, there's a good chance that we can retest the maximum level of resistance at 209 of this wide supply area between 200 to 209. Right? Again, there's a pretty wide range here. It's a 9-point difference. So that's kind of the overall outlook that you guys should be looking for IWM. But now, if I go down to more of the details here, there is a chance that we can actually come back down again. So I've actually drawn this. Actually, now that I think about it, I believe I have drawn these trend lines a couple of weeks ago, and I've also provided a price path structure like this, which I've erased before, I think on Tuesday. But this is kind of what I want to see here occurring, where we're really just playing within these two trend lines as we continue to consolidate, and we start to see more of a bullish inflow into IWM again, somewhere around nearing the end of quarter 2 or nearing the start of quarter 3. And the reason why I say that is that rates are supposed to be being cut. They're supposed to be cut around the start of quarter 3 or during quarter 3, right? That's kind of what we're expecting. That's what the market is expecting as well from the Fed. So these interest rate cuts are definitely going to be very, very bullish for small cap companies that have been completely bogged down by these, by the overall high interest rate environment since 2021 to 2022, and obviously 2023. So, obviously 2021 was where we start to see that that kind of concerning rise in prices and overall goods and services prices wise, and inflation was kind of the key point in 2022, and we saw a lot of hawkish comments from the Federal Reserve causing that bear market in 2022, and obviously the constant interest rate hikes by 25 basis points, 50 basis points, 75 basis points. So that was pretty interesting to see now, but we're about to see a potential monetary policy change as we see this potential rate cut, which will help small cap companies to finally be able to have a easy market environment. So again, it'll be very ideal if you kind of follow this potential. I want to say that word loosely here. Potential price path structure, and be eventually able to break over that 205 whole number level that I just talked about. Yes, we reached 206. That's great. We reached a new higher high, but the small caps are still going to be bogged down, mostly because of the fact that we're still months away from a potential rate cut, as in July or September. Again, July, September is when we have our FOMC meetings on each of those respective months, and so if it'll be pretty interesting to see where small caps are at by then. But again, the market tends to move based on the perception of the future, right? It wants to price in what the future holds. So small caps will definitely start to move before we see the official rate cut. And most importantly, they will start moving once the Federal Reserve comes out with a bit more dovish comments rather than hawkish. So obviously, Jerome Powell's statements are going to be very, very important from this point forward for the overall small cap and mid cap stocks. So again, I think IWM has a lot of potential this year, and you need to look at this from a long-term perspective, a mid-term to long-term perspective. And so if you guys want to be in small caps, I assure you that you guys will do a lot better focusing on the longer term, especially with equity, actual shares that you guys buy for IWM, or if you want options, try to go out months down the line, like 3 to 6 months at the minimum. So again, IWM today, just based on today's performance, it was mostly down thanks to biotechs, as we had a huge week of individual biotech companies coming out with a lot of great results on their specific drugs that are doing really well during their clinical trials, like VKTX, right, or JANX. I mentioned this on Tuesday as well. I believe specifically VKTX had a better conclusion to one of their trials on their I believe it's their weight loss drug, and it could potentially directly do better or just be competitive with Eli Lilly's weight loss drug, right? LLY's drug. So this weight loss drug is quite a frenzy here, and it holds a lot of promise, is what I'm trying to say here, right? It holds a lot of promise. So we saw a lot of this digestion coming in the overall biotech sector, which obviously bogged down the overall small caps. And financials were not too hot today either, but I believe at the end of the day, we try to pump up with the rest of the markets, but it is getting a bit hot this year, even though overall trend, short-term, mid-term, and long-term is still to the upside, right? So that's kind of it for small caps. Again, if you guys have any questions on that, please let me know. But again, for small caps, I would really want to see an ideal price path structure like this, where we continue to move in a nice solid way, and continue to adhere to these trend lines that I've made, this potential bullish pennant or bull pennant flag on the weekly time frame as well, right? And one more thing I forgot to mention here. So the weekly 21 SMA is still very far away, and I would not expect to see any type of support from the weekly 21 SMA until we're able to see this right here, the weekly 21 SMA, my light blue line, crossing over the weekly 200 SMA. Now, what's kind of making me a little bit more skeptical on a breakout to the upside for IWM this month, well, tomorrow, March, or even April, is that we're seeing the weekly 250 as well. Okay, right here and right here, where I'm marking here with my mouse cursor, my 250, they're both rising, right? And yes, that's good, which means we're seeing a lot more bullish buying coming in. That means the price will eventually move away from these longer term SMAs on the weekly time frame, on such a higher time frame. But whenever I see the 250 SMAs moving together in tandem to the upside on a higher time frame like the weekly, that usually suggests that we probably need to see a bit more consolidation before we see that eventual breakout and eventual move away from these weekly SMAs, at 200 and the 50. So that's the reason why I want to see the weekly 21 catching up first and crossing over the weekly 200 so that it can capture to the price. And once that occurs, I would hopefully think and hopefully, overall hope that the price is able to have consolidated enough to be able to break out with an immense amount of energy and great buying coming in to bid the price up higher. So that is essential for you guys to understand from a higher time frame perspective, and something that you guys should also have on your charts for IWM. And this is just my personal opinion and bias, but I believe IWM can really outperform in 2024 and into 2025, just based on how the overall market environment is shaping up so far, and with the Federal Reserve's comments on introducing the first rate cut in such a high interest rate environment later on in the year, closer to the November presidential elections. So that should be pretty interesting to see. All right, so make sure you guys take note of everything that I just said to you guys tonight on small caps. And again, this also applies to mid caps, but of course, who's looking at mid caps, right? Mid cap companies. People love to look at the extreme ends, right? Mega cap and small cap, right? Those are the most popular areas here in the market. So, but yeah, if you guys have any questions, please let me know. But if you guys are enjoying this applicable information, please smash that thumbs up down below. I see that we already have likes even before we started this live stream, so thumbs up to that to you guys. Thank you very much for that. But again, this information should be taken seriously. It should be taken with again, with the utmost seriousness, since we should be always applying what we are observing with our naked eyes on the charts, and be able to correctly, analyze and be able to correctly execute on a potential opportunity, right? So with that, I want to take a look at our tickers for tonight. FCX, okay, so this is the specific copper company, and one of the most popular ones at that as well, and uranium. So the URA, or the uranium ETF, basically, right? It's the Global X Uranium ETF, but just overall, it's the uranium ETF, right? So the reason why I want to take a look at this is that, let me actually bring it up on, excuse me, two different tabs here, if it'll load. There we go. So my laptop just kind of slows down in its processing power when I'm on live here. But all right, this is great. So FCX was a trade idea for the long term, mid to long term, a couple newsletters ago, and we were able to have, I believe, one good trade on this one, a very quick swing trade, and we had 2 losses here. But unfortunately, we had a pretty good logical stop loss, so we were able to stop out on those 2 separate times. But FCX, here's the reason why I'm looking at this one, right? So members already know this, but obviously I have this price path structure again, right? But the only reason why I have created this price path structure for potential move in the future is that, first of all, we're making this very, very large multi-year wedge, and this is created by these 2 trend lines, just like what we saw with IWM. So we have this descending resistance trend line, and right here we have the ascending support trend line. And if you look closely on the resistance trend line here, we have essentially 4 points of contact on the resistance trend line. And obviously we have a very loose contact here. Obviously it's more adhering to this horizontal level resistance at 46. So you guys can say it's a 3-to-1 contact, where 3 we have 3 points of contact, and 1 is kind of a loosely based contact at this trend line. But excuse me, but you guys get the idea, right? So I want to mention this because this looks exactly the same. It's almost parallel. It's almost uncanny here as well of how similar it looks to uranium. So URA. So what we have here is, I don't know why my trend line moved here, but is a pretty interesting story here. So we have the same situation where we have this multi-year wedge chart pattern, and I believe this wedge is a bit longer than FCX, but that doesn't really matter. So if you take a look at the trend line here on the resistance, we have 1, 2, 3 actual hits, points of contact at the major resistance trend line from this descending resistance trend line, and a loosely based contact at this trend line, but more importantly at the horizontal resistance level at 24. So this is pretty similar to FCX here, where we again have this loosely based contact at this descending resistance trend line, but more at the 46 whole number resistance level. And again, back towards URA, this is the 24 whole number resistance level where we saw that contact. So it's again, this is really and eerily similar to what we saw in uranium before its multi-month breakout, right? Since the middle of summer, from June all the way into Q3 and all the way into the end of the year. And it even moved further to the upside at the start of this year. And obviously now we're seeing a lot of distribution coming in now, as we're seeing some really good selling from, and really just overall profit taking from uranium. But I want to focus on the fact that, well, not just the fact that I want to focus on this specific area here specifically, because let me actually make a mark here. So right around here, right? So this right here, if I zoom in, also looks very eerily similar to what we're looking at on FCX. So let me just move this out of the way. So it looks like we're about to see a quick breakdown below 37.50, which is a major weekly level of support. And it looks very similar to URA, uranium, as it broke below 20. All right, this is a major weekly level support on this very macro multi-year wedge chart pattern. And so that is a major reason why I have drawn this price path structure weeks ago, explaining to my members that, hey, there is a chance that we can break below 37.50 and we can hang around 35.50 to 37.50 and tighten up over this ascending support trend line. Okay, and as we continue to bounce and hold over it, we get tighter and tighter and tighter until we see a nice move to the upside, until we retest this major descending resistance trend line and we see a breakout. And the only reason why I said that is, well, we go back to URA, uranium. That's exactly what happened. We came back down, we broke below this major weekly level support at 20, hit that major ascending support trend line, continue to stay on top of it, and we continue to tightly move within this range between 19 to 20, or simply, if you guys want to keep it simple, between the trend lines of this ascending support trend line and then this horizontal level of resistance. And you guys can clearly tell that there was tight price action as we had inside weekly candlesticks like seen here, okay? And eventually we're able to bounce away from this ascending support trend line as the price was eventually squeezed in between the major macro trend lines that make up this wedge chart pattern. So this is very typical of how ideally the price should move as it's forming this wedge chart pattern. And that's when we saw that nice breakout as the price continued to move straight into this descending resistance trend line, and we saw that nice week-long breakout, right? So it took a lot of weeks to form this entire breakout, but eventually it continued to rapidly move away from this wedge chart pattern, this macro multi-year wedge chart pattern. And so FCX, that's essentially what I'm looking at. So again, this is going to take months to develop if and only if we're following the same price action and trends as you've seen on uranium and onto these copper companies. So again, I'm using copper companies loosely. I'm just looking at one specific, but the most popular and one of the most liquid copper companies. So technically this literally makes sense, right? We're looking at a very parallel technical structure here between uranium, the URA ETF, and on this specific individual copper company. So so far, copper itself, right? If you take a look at copper futures, it hasn't been doing too hot. I mean, for the past couple of weeks, we can even see that based on FCX. But if it loads here, right? So let me see here. Right, so copper hasn't been doing too hot, but it's been making that same type of consolidation, right? For this entire multi-year wedge that I described on FCX, right? You can see the same type of consolidation here. So, I mean, there's actually another ticker here that I want to look at. Maybe it was this one. No, it was something else. But either way, you guys get the gist here, right? So this is kind of what I want to show you guys, what I'm seeing here on FCX, and compare it to what we had on uranium before we saw that multi-month breakout forming up and shaping up here. So again, copper can be the next uranium here, in the fact that we could see a similar move down, tightening up type of price action, and then that breakout. So I definitely want you guys to take a look at this one and keep this on your watch list for the next couple of months. All right, this can see a breakout in the same time frame as uranium did last year, in the middle of the year, so around May or June. But again, the time frames really don't matter as long as we see really constructive price action as the price continues to play within this multi-year, this macro multi-year wedge, and continues to adhere to this descending resistance trend line and this ascending support trend line. All right, now obviously this any type of a breakout to the upside will be invalidated if we break to the downside instead at this ascending support trend line, and that could be somewhere around 35. So again, 35 is another critical level of support that we need to hold if we do break below this ascending support trend line, right? And again, this is just a projection into the future. Just take this with a grain of salt, but just based on the data that we have, the previous data that we have, and of course the seasonal strength that can occur in the next couple of months, right? I've been talking about commodities having a seasonal relative strength based on averages in the past, historical averages. So, copper, uranium, crude oil, natural gas, right? Those are some popular commodities that people like to look at and trade, but most importantly, gold and silver. Right, those are the safe havens there of commodities. So so for FCX here, it's really important to understand that this is just from a technical perspective. I'm not looking at this in a fundamental way at all. Again, I'm literally choosing two commodities that look very similar from a technical chart, right? From a candlestick perspective, price action wise, price trend wise. So try not to really take this seriously, right? But again, it's very important to at least note that there is a similarity here, even if we're talking about two very different commodities. Okay, so again, that's a little bit of a wink there for you guys. All right, so make sure you guys have FCX on your watch list in the next couple of months, because we could be seeing that potential breakout, that multi-month breakout that we saw in overall uranium stocks, or like we see here on the uranium ETF, or ticker symbol URA. Right, so again, commodities can potentially see that have rage to the upside, like I've said here on the title of tonight's live stream. So make sure you guys are focusing in and really just honing in on popular commodities like I've mentioned already, crude oil, natural gas, because those two have already been seeing some good bid ups in the last couple of weeks, especially natural gas just a few days ago. So I want you guys to be able to be really flexible in what you guys are looking at, and be able to quickly, in a snap, be able to understand where the money is flowing in, where the money is flowing out, where we're seeing sector rotations, money rotations, and where we're seeing overall relative strength or relative weakness. And that's very critical, and it's also prudent to understand and learn. So again, if you guys have any questions on that, please let me know. Right? But yeah, that is it for tonight, guys. That's kind of what I really want to show you guys tonight, because again, I think this is a pretty important part in understanding why technical analysis is important, because we have situations like this where we see weeks of consolidation within the same macro multi-year wedge chart pattern, and you can literally transport this technical chart pattern onto a different company that also deals with a different commodity, right? So again, this is a very interesting relationship that I'm seeing here with copper and uranium. So I really hope that you guys are understanding what I'm saying here, and really hope that you guys can also add this to your future watch lists, like in the next couple of months as well. So again, this is looking pretty good so far. I think FCX can break below 37.50 and eventually retest this ascending support trend line, and as long as it's able to hold over 35, this horizontal weekly level support, we should be good to tightly consolidate and eventually break over the 37.50 new resistance. At that point, it will be a new resistance, since again we'll be below this current support level. But just as a projection here, if we're able to break over 37.50, we should be seeing a retest at this macro descending resistance trend line, and eventually see that multi-week and multi-month breakout that we saw on uranium. Hey, what's up, guys? Whoa, there are more people coming in now. Welcome, guys, welcome. So for the people who are just joining in, make sure you guys smash that like button down below. It really helps out the channel. It really helps out my live streams, my overall videos. It really helps YouTube to recognize that you guys are enjoying and actually applying and executing on the information that I give you guys, right? So again, if you guys are finding anything that I provide for you guys during these live streams, it'll be awesome if you guys can take just a second to smash that like button down below, and obviously subscribe as well, right? So again, for the people who are just coming in, I have shown what I'm seeing on FCX and URA. So this uranium ETF and this individual copper company. So there could be a potential price path structure that is very similar to what we saw in uranium, and that's the reason why we're looking at FCX. right? And again, we're about to see some seasonal strength based on historical averages for overall commodities. So if that could work in play here, we could potentially see FCX having a nice quick dip and playing into that seasonal weakness and consolidating and eventually breaking to the upside, giving us a potential similar multi-week and multi-month breakout, just like what we saw in overall uranium stocks, or just what we saw on the uranium ETF or URA. So that's a quick summary for what you guys just missed. But again, make sure, like I always say, look at and watch the recordings, right? You guys will learn a lot just from a single live stream. And I really want you guys to watch tonight's live stream for anyone who has come in late, because I talked something very important about small caps and mid caps overall, and kind of the future state on what can be occurring for small cap companies specifically. Okay, so again, make sure you guys watch from the beginning to the end, as I always say. All right, so that is it for tonight. Again, this is the last live stream for this week. I will see you guys next week, back on the regular schedule at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time next Tuesday. And hopefully we've hopefully had a great start to the month of March. All right, so again, if you guys found this really helpful, make sure you guys smash that like button down below. And if you guys aren't subscribed yet, make sure you guys hit that subscribe button. And on top of that, make sure you guys hit that notification bell so that you guys know when I am live or know when I have uploaded a new video. With that, have a great rest of your night. Thank you guys so much for watching, and good luck tomorrow.